KG, let's get started with kind of big picture here. Yesterday, essentially put a pin in the rally that we'd seen for 9 days in a row for the S&P 500. When you think about the context for that rally, is your impression that it was a head fake?
I'm not sure if it was a head fake. I mean, at the end of the day, 9 days to the upside, that's a record for at least, 21 years. So having a little bit of a pullback is really not surprising here. The close was not actually that great. And then this morning, we are seeing a little bit of pressure here. Obviously, there's a little bit of headline risk that's also taking place. You have the Palantir news, which we'll actually go over that in a second here. But something that did hit the wire here is saying that EU plans on tariffing around $100 billion worth of U.S. goods if trade talks do fail. And that's another reason why you saw that leg lower to the downside here. But having this pullback and trying to at least keep that 50-day moving average on the S&P 500, I think is going to be very key here. And a contraction or even a consolidation is not out of the norm, especially on a technical basis. I think we just need, obviously the market wants to have more fuel when it comes to news. And obviously we probably will have a very contentious FOMC meeting tomorrow as well. I think the market's also preparing for that, maybe putting on a couple of hedges and things of that nature. But overall, not a surprise that we saw a little bit of a pullback here yesterday and even this morning. Let's see if we actually do try to recover here, though.
Does that economic data that we got, the ISM services sector data, does that matter in the context of today's market with so much headline risk?
A little bit. Obviously, the services sector encompasses around 70% of the total economy for the United States. So you want to see the purchasing managers of services companies actually maybe getting a little bit more optimistic. And I think that's exactly what you kind of saw yesterday. We did beat the street's expectations to the top side here. Prices continue to be elevated, but you did not see a further decline or an aggressive further decline to the downside when it came to the sentiment there, which is a little bit different than what we see for ISM manufacturing, which has been more of a bearish data point over the last year and a half. So the data itself was okay, but I think the market's also just waiting for the hard data. We know it's going to take some time. We know that we have some port issues. There are going to be some conversations and experiences of supply chain issues and maybe shortages on the shelves here. And I think that's what the market's really bracing for. What's the actual impact rather than the sentiment of these tariff policies and lack of confidence when it comes to the economy. At some point, that is going to kind of run its course. And now we need to see if it's actually showing up in the data. And unfortunately, it probably won't show up for another month or 2 months there, Diane.
Okay, yeah, you make a great point about the ports, because I've seen the ports of Los Angeles, Gene Soroka doing the rounds in media, talking about the challenges at the ports there, and I suppose trying to figure out ways to alleviate this. When you think about the Fed meeting tomorrow, obviously a lot of focus is on that, but with the expectation that we're essentially not going to see a rate cut. I know you've mentioned some of the focus may be on QE. What else do you think we're going to be looking for?
Yeah, it's going to be very difficult. So the Fed right now, obviously, it probably will not cut rates tomorrow. And I think the big question mark is going to be around June. The June rate cut, which the market does have really kind of priced in here, at least around 70% or so, is going to be very difficult because you really only have around 6 weeks to get the economic data in order to justify those rate cuts. And unfortunately, for the Fed, they're probably not going to really focus on the inflationary pressures right now to the downside if inflation does come in a little bit lighter, just because it will take, once again, 2 months, 3 months for a lot of these tariffs to actually go through the economy until the consumer as well as the producers actually really feel it. So you will need to see the labor market cracking. And unfortunately, once again, you got 6 weeks in order to do so. Initial claims, even though we get that on a weekly basis, could also be very volatile. So you might be discounting that number. So you're really hanging your hat on the jobless claims that we're going to get in the first week of June to really give the Fed the confidence that they can cut. One thing I will say, though, there could be a bright spot here. If the Fed actually signals any type of QE or setting the stage for QE in the event that something does materially impact, let's say, the credit markets itself, that could be enough of a signal for the bulls to get a little bit more confident that they can rip this thing to the upside here. Stopping quantitative tightening, maybe stopping the roll-off of mortgage-backed securities, and then ending or eliminating the roll-off of U.S. Treasuries, which is only around $5 billion. That could be enough of a sign for the market to say, okay, the Fed is ready to do some type of action. If it's cutting rates, who knows? But actually, quantitative easing, if you kind of look over the last couple of cycles, has been a lot more more effective, Diane, at trying to ease credit conditions than cutting interest rates, which, as a consumer, a lot of the things that we consume or the things that we purchase is really not floating rate. It's really fixed rate outside of credit cards for the bulk of
great
us.
point. Great point. All right, let's talk about levels that you're looking for on the S&P 500. We finished at 5650 yesterday. What are you looking for to the downside and the upside?
Yeah, so to the downside here, looking at around 5550 to the downside. And then if you're looking at the upside, looking at 5700 here. I'm sorry, downside. Yeah, 5500 for the downside. To the upside, still 5700. That's been an area of resistance. 5680 has been an area of resistance. We want to be able to try to test that and break through here. We do not want to really see a failure of that 50-day moving average. I think that's something to keep on the radar from a technical standpoint. That would kind of signal that maybe we are a little bit top heavy and maybe we see some aggressive selling to the downside here in the near term.
And then let's get into these results from Palantir. It looks like it was in line on the bottom line. They had strong growth in commercial, but take us through some of your takeaways here.
Yeah, you're seeing a little bit of a fade. The stock's down about 8% in pre-market trading right now. But when you're looking at the results, for the most part, they were actually really good. The adjusted earnings per share came in line with the street's expectations at 13 cents. Revenue actually did beat. That came in at $884 million. Street was looking for around $863 million. And year-over-year growth for revenue topped out at around 39%. Commercial revenue did increase 71% on a year-over-year basis. Government revenue also increased by 45% on a year-over-year basis. And they increased their full-year revenue guide as well as their Q2 guidance here. And they boosted the adjusted free cash flow. I think this is a situation where the stock was trading at close to all-time highs, very high bar going into this, and we probably didn't see enough on the guidance front to really get enough enthusiasm to try to break through here. But the stock has been one of the best performers, actually the best performer in the S&P 500, so it's been holding up.
Yeah, I was going to say, I mean, look, clearly it's a point where investors who are in that could probably take some profits here. Any other takeaways that you want to leave us with when it comes to Palantir? I mean, I thought it was good to see that growth in commercials since, they've been growing that part of their business at a faster clip than the government side. Any final thoughts on that?
Yeah, I would just say, we have to keep this company in context. They've had really good growth over the last year or so, but the comps are going to get a little bit difficult. Even though the nominal numbers look great, you probably will start seeing a little bit more of a deceleration in certain areas, especially when it comes to U.S. government contracts. Is the market willing to still pay a hefty premium for that deceleration? I think that's the big question. It doesn't mean the numbers are bad. It's just that it's now a very high bar on a year-over-year basis in order to try to really wow the street. And that might be another reason why we saw a little bit of this sell-off here today.
All right. Thanks a ton. That's Kevin Green, Senior Markets Correspondent, with the latest look at Palantir and the levels you should look out for the S&P 500 today.